What's up guys, my name is Kevin, and today I'll be talking about why you should invest in companies you use on a daily basis in the stock market. And what I mean by that is look around you and look at what products or services do I use on a daily basis. Already understand that underlying basic business model. And for myself, there are multiple examples of companies in my portfolio that I use on a daily basis. And one of my biggest positions in my current portfolio is Facebook. Facebook is a company that owns Facebook, Instagram. They make most of their money from online advertising. They're growing in sectors like social media, online advertising, and their next cash cow business is going to be their Oculus side of their business, focusing on virtual reality and augmented reality. They're also getting into the creator economy, growing their personal brands in their own niche, and just posting on Facebook and making like a career out of it. It brings more people to the platform, and you could grow a business online that produces you income that you're really passionate about. I'm a person that's on social media. I don't go on it for hours and hours. I just check on it for a couple minutes a day and just see the updates on my feed and see if anything's really going on. And we could see with like online advertising, more and more people are getting connected to the internet every single day. More and more people are surfing the web. Not a lot of people watch TV nowadays. They're either on their screen watching YouTube, on streaming services online, or just being on their phone and being connecting with their friends or family. And we could look at other companies too that are popular. Another investment in my portfolio is Amazon. Consistently, I see 3 to 4 trucks in my neighborhood a day. I love their service that they have with Prime shipping, streaming movies, having their Audible segment, purchasing and listening to audiobooks. Go to Whole Foods once or twice a month because of their high quality produce and products they have, being all organic. And companies that I don't own in my portfolio that are public in the market are, we could look at Apple, Microsoft, Starbucks, Chipotle, any retailer like Walmart, Target. If I make a list of 100 companies that I use on a daily basis or weekly or monthly, type in on Google that company and see if they're public. And on Google, it tells you right away if it's public or not. Because if you type in that company on Google, you'll probably see a ticker symbol or a price onto it. You're going to have like a competitive edge to other people that are not familiar with that certain product. This concept or this type of investing I got from Peter Lynch. He was a very famous fund manager with Fidelity, 70s, 80s, and 90s. And he returned an average of 2x the market. And what did he do? He invested in companies that people use on a daily basis. The competitive edge from Wall Street. And he said like Wall Street isn't going to retail stores, going around town and seeing like what is selling, what is not, observing like their society. They're inside making complex spreadsheets, investing into small cap companies like penny stocks or pharmaceutical companies that have no revenue. They have an underlying story, but what is their revenues to prove? And when you're investing in the stock market, you don't have to invest into something that you don't really understand. Invest into something that you use on a daily basis. It makes investing exciting, and B, instead of putting that money into that company, why not invest into that company you resonate with? You resonate with their products and services or their mission statement or see like potential in it. Companies like, not a financial advisor, like Facebook, Amazon, Apple, Tesla. If you look at those companies, like ask yourself, are those companies going to be bigger or smaller in the next 5 years or so? Are they changing society as a whole differently? Are they improving society? And that's it. And sure, it's more of a broad type of an investment style. Makes investing more exciting for the masses. Fundamentals do matter when investing into stocks. And what I mean by fundamentals is, do they have growing revenues year over year? Is this company continuously innovating? What is their moat? What is their comparative advantage to other companies in their sector? What is their management team? What is the PE ratio? What's the price to sales ratio? Understand like, is this company financially well in the short term? That's why it's really important to read the 10K or 10Q or conference call. Each company has to publish a 10K, which consists every single year, which consists of what is their specific company do, the risk factors of investing into this company, and their financials. What's their revenues? Are they financially well? And where's their cash going in and out? Which is their income statement, balance sheet, and cash flow. And that's very specific. If you take the time and energy to do it, you can do it. It's all like in the mindset. And when you're investing into individual stock, you could outperform the market. Really like willing to do it. And like I just want to like sum up this video, like make a list of 100 companies you use on a daily basis, monthly or weekly, and see if they're public. Go on Google, take 5 to 10 minutes on each company and see if they're public, because you're going to have a competitive advantage to other people because you use their products. You know what's coming next for if it's a restaurant, a clothing brand, a tech company, or a company that's been well established. Invest into your favorite companies because it makes investing more fun. it's another form of investing that I'm like really getting into. And thank you for watching, and peace out.